Today, we've got some urgent news for you. The housing market crash and banking collapse we've all been dreading is finally here. So buckle up, because we're going to dive deep into what's happening, why it's happening, and how you can protect your financial future in these uncertain times. But before we get started, don't forget to hit that like button and subscribe to our channel for more breaking news and analysis. All right, let's dive in. First up, let's talk about the housing market. In the past couple of years, we've seen a massive surge in housing prices, with prices in October 2022 being 38.1% higher than they were at the start of the pandemic. But now, experts are predicting that the bubble is about to burst, with home prices expected to drop by 10% to 15% by the second or third quarter of 2023. Why is this happening? Well, there are a few reasons. Home construction has fallen for the third straight month. Institutional home buyers have dramatically reduced their buying levels, and there's still uncertainty about the economy and rising unemployment. All these factors are pointing to a major housing correction, which could be the largest in the post-World War II era. Now let's move on to the banking collapse. It all started with the fall of Silicon Valley Bank. But this isn't just a one-time event, as other banks have started to show signs of distress as well. In fact, financial crises have occurred on average once a decade over the past half-century, so the current crisis is actually overdue. And with central banks raising interest rates, the situation is becoming even more precarious. The Bank of England, the Federal Reserve, and the European Central Bank have all tightened their policies, and we're starting to see the consequences. Share prices are plunging, housing bubbles are deflating, and banks are suffering massive losses on their holdings of government bonds. So what role do central banks play in all of this? Well, since 2008, banks have been operating in a world of ultra-low interest rates and periodic injections of electronic cash from central banks. This cheap and plentiful money was originally seen as a temporary solution, but it's become a constant support for the markets. However, as central banks raise interest rates and reverse their quantitative easing policies, the financial system is starting to crack. The actions taken to rein in inflation are causing major issues in the banking and housing sectors, and it's only a matter of time before we start feeling the full effects of these decisions. So, what are the signs that we're headed for a recession? According to Deval Joshi of BCA Research, there are three classic indicators: a downturn in the housing market, bank failures, and rising unemployment. We've already seen a 20% decrease in house building over the past year, and the problems at Silicon Valley Bank and other U.S. regional banks suggest that bank failures are becoming a reality. As for unemployment, the U.S. rate has increased by 0.2 percentage points so far. If it continues to rise, we may be looking at the onset of a full-blown recession. Now that we know what's happening and why it's happening, let's talk about how you can protect your financial future during these uncertain times. Here are some tips to help you weather the storm. 1. Diversify your investments. Don't put all your eggs in one basket. Make sure you have a mix of stocks, bonds, and cash to spread the risk. 2. Focus on long-term goals. Instead of panicking and making rash decisions, keep your long-term financial goals in mind and stay the course. 3. Consider refinancing. With interest rates on the rise, now might be a good time to refinance your mortgage and lock in a lower rate before they increase further. 4. Build an emergency fund. Make sure you have at least 3 to 6 months' worth of living expenses saved up in case of unexpected events like job loss or medical emergencies. 5. Stay informed. Keep up with the latest news and developments in the economy so you can make informed decisions about your finances. The housing market crash and banking collapse are real threats that we need to be prepared for. By understanding the factors contributing to these crises and taking steps to protect your financial future, you can minimize the impact on your own life. Remember, knowledge is power, so stay informed and make smart decisions to navigate these challenging times. And that's it for today's video. Thank you so much for watching. If you found this information valuable, please hit that like button and share it with your friends and family. Don't forget to subscribe to our channel for more updates on the economy and tips to protect your financial future. Until next time, stay safe and stay financially savvy.